Hello, ladies and gentlemen, and welcome to this afternoon live webinar. For those who see me for first time, my name is Theo, and I will continue the series of trading psychology, actually, that I started some time ago. We have few webinars done so far about trading psychology, and as I got from the feedback from viewers who watch it later, and also from live participants like you guys here, that they saw a lot of value in that, and trading psychology was something they were really needed into their trading progress. So just before we start, I would like to make sure that you are aware about the disclaimer here, the risk warning, just to make sure that this content is for general information only, and it's not intended to provide trading or investment advice or personal recommendations. And all the examples I will use and all the trading content I will refer, it has nothing to do with what exactly is going to happen in the future. It's just based on previous results. We predict what can happen next in the markets. All right. Again, I see more people, they joining us now. It's 2 p.m. GMT time, or 4 p.m. in EEST time in the Eastern European area. So one more time, guys, I would like to welcome everyone on this live webinar. And I hope you're going to gain a lot of value, information, and understanding about how we have to create a mental framework and learn the most important fundamental aspect of trading. That's how can we think in market perspective / how can we think in probabilities. Okay, I hope you're going to enjoy this session with me today, and let's get started now. Because you are here at our company at Admirals, just for the people who really join us for first time, I would like to let you know about our broker. We are a Forex and CFD broker. We offer thousands and thousands of financial instruments. Now we are also getting more deep into the investment services. So there you're going to have the opportunity to get on to the investing with us. We hold license from multiple well-known, recognized firms like in UK, FCA, in Australia, the ASIC, in Cyprus, the CISEC, in Estonia, the FFCA, in South Africa, now in Canada, and a few other places. We try to keep all the time our spreads as minimal as possible. And as I like to put it out for intraday traders like myself and many others, we really like to have as minimal spread as possible so we can make more pips on the price movement, if that makes sense. Okay. You can trade our products from the well-known platforms, the MetaTrader, the 4 and the 5. Usually when I will share the platform, I usually share the MT5. And we have some exciting news coming soon. So when time is coming, I'm going to just reveal it. It's going to make also much more easier your charting process, if that makes sense to some people. So guys, what can you get benefit beside the knowledge here on the webinars? It's also the podcast. For now, every single Monday, I personally record the podcast. I talked about the weekly fundamental upcoming news events in about 5 minutes length. You have everything you need to know in order to understand how the market possibly they can move based on the fundamental perspective. I try to put it in the simplest format so it doesn't complicate a lot your thought with difficult words. Okay, And I, again, from the feedbacks, I hear that people, they are so grateful that they can have access to this tool, the podcast. Let me just quickly share the screen with you and let you know where you can find them actually on the website. Just give me 1 sec. Sorry, ladies and gentlemen. Oh, that's not the one. Okay, here it is. Weekly trading podcast. Here. So I will share with you the address, guys. Here on the chat, you can find it. Please refer to your chat below. Here it is. Please click on that. You're gonna see the podcast, the old episodes, and the new one at the top. But if you scroll down, you can download it and listen it a few times. I believe you need to hear it to listen it a few times, and it's going to be much better. All right, so let's go back to our presentation. And to make sure you all have the Admirals mobile application downloaded on your devices. As I always say, it's a great feature when it comes to investing. I usually do all my investing activity through this application, and also monitoring the accounts and your positions. You can also do that. So tick. Guys, by the way, because in many occasions I understand that it's better if you have the engagement here with myself. So I would encourage every single one, regardless for how long are you trading, if you ever trade on a live account or not, if you trade for 1 hour, 1 day, or 1 year, please make sure you use the chat below and just write all your questions, any thoughts you may have, any worries, any experience you would like to share. Just for your participation, that will be encouraged and that will be great. Okay, and for the brave ones, they're gonna start typing. That will be even better. Now, you already know, or if you are new here with us, you know that we have the Instagram page. So you can follow us on the Instagram, and then you're going to ask me, okay, Theo, what's the Instagram page? And here I will share it with you in a sec. Here at the Instagram page, you can see, guys, we have a lot of reels coming. It's myself and other people. Some funny moments from TikTok. We put the reels here, but also with a valuable lesson about trading, about the trader's personality, and all this stuff. Okay, so please make sure you follow us on the page. Also, as we are here, I will share with you the Telegram page as well, the channel. Here it is. Wherever we go live, we put it here. Monday to Friday, I do live trading sessions from 7:30 a.m. to 8 a.m. London time. So you can subscribe here. And the last one I would really like you to know, it's the YouTube channel. Here is the YouTube page. You can subscribe to us on YouTube. The Trading Spotlight, it's an area that we put all the recording webinars from myself and Jens and Paul's. And here you can watch the live trading we do on a daily basis. All right. So here is for you. Let's go back to the presentation. All right, so for myself, just very quickly, if you haven't had the chance to join me in one of the live trading sessions we do in the morning, my name is Theo. I'm originally from Cyprus, an island in Europe, but the last 10 years I used to live and work, of course, in Melbourne, Australia, and sometimes in Sydney, but let's just keep it simple, in Australia. All right. So my background, the academic background, I hold a master's in physics. And when it comes to trading, I love trading, swing trading, and when I have time, really, I'm all into intraday trading because I love the process, and that's more than enough. When it comes to investing, I'm a long-term investor. I'm focusing mostly on the automotive and tech stocks. That's what I understand better, and that's where I put my money, let's say, my funds. And here at Admirals, I'm an investing and trading educator. So, time for today's lesson or today's webinar. So, what we're going to see today, first, we're going to see how it looks like and how it feels when you think in probabilities. Then we're going to take it one step further, and we're going to try to understand why do we need to do that. And then we're going to finish with how can we create that actual mindset we need to acquire in order to become the trader and investor we want to become, a profitable, a skillful trader and investor. And guys, trust me on this. That's not consider any personal advice or financial advice, but it's a promise from me. If you're gonna be open to understand how you really need to think in terms of a high player on the game, a professional trader, a skillful trader, today it's going to be your day one in trading. You're going to thank yourself for these 40 minutes you spent with me here at this webinar, because what you're going to get today, it's going to transform your entire trading and investing activity. All right. And I promise that to you. And I'm sure some of you, they will apply it. Some of you, maybe it's going to take more time to accept this new way of thinking. But for those they're going to apply it and they're going to stick with that, I'm sure you're going to send me a private message at some moment down the track, and you're going to just say, "Hey Theo, we've done. Hey Theo, we've done it. Thank you," and that's all. All right. So, as usual, I always recap for what we learned in the previous webinars, and let's just have a look. So we started talking about the trader psychology pretty much, and then we start making the introduction of saying that we all understand that we do have this trend, right? Not this trend, sorry. Let's say we are not traders. First time we have a screening time, and then we see this line here moving like this and then like that, and it moves backwards and then upwards, backwards, upwards, and so on and so forth. And then the question is, what do you see here? And I'm sure most of the people will agree that we see a schematic pattern that it has these bends here on this line, upwards and downwards. And if we put some scale starting from 0 here it's the time. If we put the time here, and then here we put numbers, let's say 1, 2, 3, 4, 5, 6, and so on and so forth. Most of us, we will agree that at some point in time, this number is higher than this number here that developed earlier. So if you are a trader or investor, or you have a basic understanding of this, it's just in your trading and investing world explains that we have a market that the price it's appreciated by the time, or we have an uptrend. Okay. Now, what do you see here is exactly what we say. What does this mean to you? To someone who just see this picture here, it means an absolute nothing schematic pattern. It's a schematic pattern like the one we described. Has some numbers here. It says A123, B123, have some dot blue lines here, some continuous lines, black colored here, but it doesn't mean anything to me. Okay, let's say you are a trader now, all right? At this point in time, it still means nothing to you, absolutely nothing. Zero meaning, zero emotion, zero energy, right? Now, we have something highs and low. Kyler, oh, Kyler, welcome. I remember you, Kyler, from the morning webinars. Thank you for joining us today. And sorry, I had it on the other screen. Now I saw your comment. So guys, a price move means nothing to us until it's time to initiate and trade, until it's time to decide that this market is trending higher. And let's say right here, sorry, after this higher high, broken of this high, I want to become a buyer, let's say. All right. Or something like this guy here. This guy here at B1, it says, I decide to become a seller here. And that's what I believe it's going to happen in the market next. That's what I would like. That's how I would like to act on this trade. So a price move means nothing to us, has zero emotions, has zero energy, has a zero meaning. We don't even pay attention that that's presented until it's time that we're going to initiate a trade. And let's see what is going to happen. Assuming that you sell at B1, all right, and at B1 you see this correction. The market is just moving downwards. That it's a normal consequence of any uptrending market. And at some point it's going to take over and keep pushing to the upside. So at B1 you sold. All this time you were feeling so happy, so grateful, so proud. I make it. I found the trade. Wow, look at me. I'm the boss. Yay, well done. I'm in the trade. All over the sudden, you see the trade comes here. Hey, you are still in profit, right? You sold at B1. But what's more painful is that the illusion. Guys, please make yourself a huge favor and pay attention for these 45 minutes we're going to go through this webinar. That's all I'm asking for you. You're gonna remember this for the rest of your life. All right. You feel betrayed at this point here because the market is taking away your profits. It doesn't take away your money. It takes away your profit. It takes away profits that the market produced, right? Were you the one who was moving the price? No, the market was moving the price. But in your thought, you established the belief that, hey, market stole my profits. Hey, you are still in a profit. Yeah, but market stole my profits from here to there. Hey, if you run the market, then you would know the turning points and you will be out of the trade, right? Yeah. Okay. So you are in a winning trade. Let me change the color. You are in a winning trade. You entered here and the price is here. So you are winning. But you feel sad and you feel upset of what's missing because of this gap here. Because of this gap here. Okay. That it was your money and now it's not your money anymore. Okay. Keep that. Guys, the dots, they're going to be connected really soon. And please stay excited. So let's say you bought at A1 at here. You are a buyer. And at this point, the market, it comes here. How do you feel? You feel happy, right? You feel exactly the same way like you used to feel when the market was selling. After you enter short as well, the market was selling to this direction down. Now you bought at A1 and you are extremely happy. You see a new high in the market, the B1 is taken out by the buyers, B2 created, you didn't take any profit because you think that this is going to be the trade that you bet 100 euros and you expect to make 100,000 to buy a new car, to go some vacations and to spend some money in nice restaurants and all this stuff. And then you see the market make a normal correction here. And at this point, what do you say to yourself? Do you have any similarity with these two feelings? Do you feel like you felt at this point here on this retracement? Maybe. So the bottom line is that many traders, including myself, at the beginning, when we start trading, we have expectations from the market and expectations that they are out of our control. Expectations that we want to meet them at a point that they're going to create emotions of happiness, satisfaction, proudness, and rewarding ourselves for that. But the reason we have this expectation, it's because that's how we've been programmed for the whole life so far, regardless how old we are so far. And we expect that coming to the trading and investing world, we have to behave similarly or the same way. But in the market's perspective, that's not how this game works. That's totally different approach. All right. I hope some people, they already had this aha moment so far, because what do you guys understand from this example? If you sell here or if you bought here, at some point you are in a winning trade and you are upset, maybe sad, maybe frustrated, maybe nervous. You have this kind of feelings that they produce negativity in within your yourself. Okay, so how can we stay neutral, Theo, in our trading activity, and what can we do? Allow me to say that you are at the right place at the right time if you just ask yourself this question. Now, we also talked about why traders, they feel much comfortable to trade support and resistance. To trade between support and resistance within a range market, and also why they feel more comfortable to take these counter trend correction trades. All right, I can't go to extensive analysis. The webinars are recording for this, and so you can watch them. But briefly to mention that the reason traders, they like to trade range market, it's because it gives them a feeling of certainty. It gives them the emotion that if I trade within these boundaries, I am in control. Guys, write this down. Traders, they feel much comfortable to trade within these two boundaries, like the euro against the Canadian dollar, the euro against the Canadian dollar on the daily chart. Months ago, 2 or 3 months ago, we had exactly this pattern, and this schematic, I took it from that pair. So we were trading on the live trading webinars. We took many trades with this, but we were always saying with low risk because they are very low probability trades. But why we said that? Some people, they think, my goodness, this is the easiest market to trade. Yes, but it's very low probable outcome you can produce from this, because at some point the price is going to break either to the downside or to the upside, and then it's going to leave you with what? With just some losing trades maybe, or some negative emotion, so you get upset with yourself. And why all this? Because of the lack of understanding or the lack of knowledge how really the market works, and how we have to think in terms of market perspective. Okay. By the way, guys, I like when I'm asking you, when I say something and then I ask you, okay, it's kind of, I expect to hear, yes, yes, okay, yes, okay. But unfortunately, I never hear that because I cannot hear anyone. So please make sure you use the chat for communication. Guys, how do you feel so far? Anything? Yes. Thank you, Kyler. Thank you so much. So yes, okay. Hello, Jasper. Hello, Francis. Yes. Okay, great, great, fantastic. So, thinking probabilities. First, what does to think in probabilities, or better, what the probability word means? What's that, Theo? Now, what's that? Raquel, thanks for joining us on this webinar. Good afternoon from Belgium. Oh, you see, guys, you slowly start talking here. Thank you so much. It's 4:25 local time, and you now start talking. Thank you. All righty. So, a probability, it's a number. So when we talk about probabilities, we are referring to a number that reflects the chance or likelihood that a particular event will occur. And this can be expressed with percentages from 0 to 100. So we can say that a probability to rain in Cyprus today, it's minus 20%. So there is no chance to rain in Cyprus. That's certainty. That's not probability. Okay, let me see. There are not even clouds here. My God. So the probability to have some rain in UK, for example, now it's plus 200%. Yeah. No, I'm joking, guys. So we express the probability in terms of percentages. All right. Now, trading and investing statements, I would like you to install. By the way, guys, this webinar here, we have another 30 minutes to complete it. You're going to learn stuff that in other places you have to participate 2 and 3 days, or if you're going to sit close with me and I'm going to go really intensive into this stuff and so deep, 2 days, it's not going to be enough from morning to late afternoon to analyze everything into that extent. Okay. But trust me, I put enormous amount of effort to make sure that in these 30 minutes remaining, you're going to get what you need to go to the next stage, because I believe that you're going to trust this process, and you're going to engage with that, you're going to apply it, and you're going to allow the time to show you the result. It's not going to happen from the one day to another. Do I have your permission, and do I have the okay that at least you're going to keep a very open mind to observe carefully what you're going to say, guys? Please let me know. Yes, yes, yes. Thank you, Claudia. Thank you, everyone. Okay, okay. Thank you so much. So, guys, a high probability trade does not guarantee in any way a winning trade. It doesn't mean that because we have a high probability trade, necessarily we're going to experience a winning trade, because that's That's what traders and investors, they get confused all the time. It's a high probability trade, all in. I have 1,000 euros on my account, 10,000 euros on my account, Euro USD, nice bearish engulfing, downwards, trend line resistance, moving averages, everything appears. So high probability trade, they have the association in their mind that it's a guaranteed trade. That's wrong statement. Okay, so from today, uninstall this from your mental trading framework. Maybe in other industries or maybe in other parts of life, this can work, but accurately in trading and investing, this doesn't apply. So a high probability trade does not guarantee that we have a winning trade. Next, a low probability trade on the other side does not guarantee a losing trade. Hey, Theo, what the you talking about? What are you talking about here? How is possible a high probability trade to not guarantee a winning trade? And how is possible a low probability trade do not guarantee a losing trade? How is that? It's a low probability trade, Theo. How cannot be a losing trade? It has to be a losing trade. Yes, guys, but probabilities, they express from 0% to 100%, and a number 5%, it's also a probable outcome, and it can give you what it means 5%. It means 5 out of 100. Yes, 100%, it's the number 100. 0, it's 0. 5, it's 5. So if I take, now I'm making an intro to the next slide. If I take 100 trades within 4 months, if I take 100 trades, then 5 trades, there are, let's say all of these are low probability trades, but still, if I have a 5% probability, then it's 5%. I'm going to experience some winnings. So even a low probability trade can give you winning trades. Okay, guys, please pay attention to these statements. Now, a high probability trade does not mean we will over risk on a single trade, the one we associated with the first statement. A high probability trade does not, I would like to ask for someone to read it out loud, but really, because I'm sure many of you, if you could say, if I say, hey, does it look similar? For those that are trading, of course, 3 to 5 months and more, one of all this stuff, 100% will be familiar. So who is the brave one to throw on the chat box that I can associate at least with one of these 4 statements? Come on, let me know. So the only guarantee in life is okay, right here. Yeah, that's absolutely true. That's 100%. That's the only guarantee. So when I was a beginner trader, definitely I've done all of these mistakes, guys. We are humans. We have to make mistakes. Mistakes does not mean we are bad people or we are not skillful or we don't have room to learn. No, mistakes means we are brave enough to do something. We do it and we learn. Okay. It's a mistake also not to do things because you will never learn. So it's not only we have the tendency to associate that mistake, it's a bad thing. No, it's also a mistake not to do something. All right. And of course, a high probability trade does not mean you don't need to use your stop losses when you are trading. Okay. Let's go to the next. How to approach now this new way of thinking. And how can we get there as soon as possible? We're going to use the following method in order to achieve that. We're going to take 20 trades. On each trade, we're going to risk 2% maximum. Maybe you want to risk 1%. However, you feel comfortable, you can risk. It was some point in my trading career, especially when I used to trade hundreds and hundreds of thousands of dollars in a prop firm, that really I remember the first few trades I took, regardless I was a skillful trader at that state, I was scared to risk the same amount that I used to risk on my personal account. Why? Because the number was so enormous, and it got me into a mental state of fear. So I went as low as I could go at that stage in my life in order to gain the confidence to increase gradually my risk. So on an average, we say that up to 2%, especially for retail traders, it's much more enough, let's say. Okay, and there are also other statistical methods that we use to analyze, and the 2%, it just fit. Okay, but above 2%, then it becomes super risky, and let's say it's not very measurable, the risk. It's not very favorable. So up to 2%. And let's take we trade 1 until trade 20. We're gonna to do this this example, we will put a fix. Write this down because it's not on the slide. A fix stop loss. If the price gonna hit our stop loss, we are out of the trade. We don't mark around with stop losses. We don't move the stop loss if the price going to hit our stop loss. We have a business here, and this business have expenses, and we are happy to deal with expenses of our business, because if we look after our expenses carefully, the profits, they will find their way themselves. All right, so we have a fixed stop loss and we have a fixed profit target. If you ever try to write on the Zoom with this pen using the mouse at the same time when you are excited to do the webinar, I don't know how you can manage it. I don't know even how I managed to do it. Fixed profit target. Okay, so let's say that you understand what I just write here. Okay, so guys, let's assume now that on some trades we will win and on some trades we will lose. All right, is it fair enough? Do we all accept this? Because this is, at the end, you will realize that this is a matter of acceptance. Once you accept it really within your head, then the whole game is changed. Okay, do we accept that if we're going to take 20 trades, however we're going to take them, in whatever time frame we want to take them, doesn't matter. We're going to have to deal with winners and with losses. Frederick, that's a super great question. If there are also break even, but for this particular exercise, I would like to avoid the break evens for the simple reason that the break even, it's a barrier because we will interact with our trades. And at this exercise particular, guys, this exercise will unlock everything within you in terms of trading and investing. But we have to do it to the letter. We have to do it without with the discipline of either I win and I make this amount, either I lose and I lose this amount. Everything will be fixed. Okay, and first and foremost, definitely we all will take it to the demo accounts, okay, not to a live trading account, unless you've done similar exercises in the past and you feel comfortable with that. Okay, and please make sure you share it with me. I would really like to know. So I just assume that the first trade was a winner, the second trade was a winner, then the fifth trade was a winner. But the third and fourth, they were losing. The sixth was a loser. The 11th, the 8th, the 9th, the 13th, they lost. But the 7 won, the 10 won, the 12 won, the 14, 15 won. And then 16, 17, 18, 19, and 20, all of them, they lost. Okay. Now, because we are humans and we interact with the outer environment on a daily basis, and in some other areas of our life, when we experience something, it's not a winning, we take it personally and we feel defeated within ourselves. So a losing trade does not determine who you are as a human being. Okay, make it crystal clear within your head right now, right on this webinar. A losing trade has absolute nothing to do with who you are, with the amazing personality you have within you. Okay, take it out once and for all, and please remember that for as long as you want to remember it. Okay, so we don't judge ourselves based on the outcome of any trade. Then, based on this example, I randomly distributed the winners and losses randomly. 7 trades won and 13 trades lost. Now the question, Theo, if you do this out of the 20, if we multiply 20 times 5, it means 100. So if we multiply 7 times 5, it means 35. We find the percentage. All right. So 35 out of 100% we won. So the probabilities of our winners, it's only 35%. It's not even 50%, ladies and gentlemen. It's not even that much. I just took the extreme scenario that you have a system like that wins only 35 times on every 100 trades you take. All right. So the rest 65 are losing trade. Okay, Theo, again, how can I make money if I'm losing more than I win? I understand the probabilities so far, but how can I be ahead of the game doing this? How can you be ahead of the game? Very interesting question. So I would like to introduce you to the concept of the risk management. The concept of the risk management states clearly that if you understand a proper professional risk management methodology, then and only then you will be ahead of the game. Because we don't know how often we will win, and we don't know how often we will lose. We just know that 35% only it's our winning ratio. So the risk management will help us to be ahead of the game if every time we enter a trade, we are aiming to make double the amount of money we're going to lose if the trade goes against us. In simple words, it's translated to 2-to-1 reward to risk ratio. It's more simple words is if I use £100 or $100 or €100 to enter to risk on this trade, if this €100, it's the 2% of my account, let's say I have an account of 10,000 euros and I risk 2%, it means I risk €100. So every time I enter the market, I have a stop loss at a place that if €100 will be taken out of my account, I lost the trade. I'm not a loser, I lost the trade. And that's, guys, many traders, you talk to yourself differently that you should talk. When you are losing, you lost a trade. When you are winning, you won a trade. Don't associate the I'm a loser with I'm a winner with trading. This has nothing to do. Okay. So every time you win on a trade, you make 200 euros. That's what it means 2-to-1 reward to risk. Every time you lost the trade, you lost 100 euro from your account. All right. So if we take this scenario, it means 7 wins times 2, because every time you win, you make double the money. It means you are plus 14. But you had 13 losses, but when you were losing only 100. So you had 13 losses times 1, because you were risking 100 euros in every trade. You won 7 trades, but because your take profit, it was twice as much that what you risked, you had double the amount on profit. But when you had a lost trade, you had lost only 100 euro based on this example. Is that clear so far? So you were risking 2% only on any trade. So this 14 plus 14 times 2%, it means plus 28%. This minus 13 times 2% risk, it means your account lost 26%, but your account won 28%. So the net is plus 2, that's profit. That's a sample of 20 trades. But if you translate it as 100 trades, it means you have to multiply this by 5. So you have to multiply this by 5 as well. So on 100 trades, let's say it's going to take you a year to do 100 trades, you finish the year with 10% increase of your capital. Is that good? That's brilliant. Go to the bank, especially if you want to visit Switzerland banks maybe, and you will see the difference. All right. Now, I've done, guys, this example on the worst scenario that you have a system that only wins 35% out of time. Usually a low probability trading system, they give about 45% winning to 55% winning trade. Okay, that's an enormous amount of profit. With some numbers like here, you double your account in a year. Okay, now the conclusion is that even if you have that system that it's going to win only 35 times on 100 trades and the rest 65 they will lose, then you can still be profitable at the end. All right, that's what the risk management has to do with. And the risk management, when you are aiming for 2-to-1 and you are black and white on that, then and only then you're going to experience that freedom in your state of mind, that you're going to just get relieved by any negative emotion, any negative association has to do with your trading. Okay, guys. Now, the results, we just say them, but if that's so simple, so where is the problem, Theo, and why traders, they don't apply it? That's a brilliant question, isn't it? Why they don't apply it? Obviously, because they never learned how to think in probabilities. Okay, and how do you think in probabilities? Again, so remember, we have this example. You had only 7 wins and you had 13 losses. Now, how can we learn to think in probabilities? That should be the next question, right? So how are we going to do it? In order to be able to do it, we first need to understand the law of randomness. Excuse me, Theo, what's up? The law of randomness. Now, Theo, we got really confused with you today. What's happening with this randomness? What is this randomness? Randomness, it means simply a random distribution of winners and losses within any trading sample. It has a random outcome. Which trade it's going to be the winner and which trade it's going to be the losing trade. Okay. So, as I said, we have to understand this law. Okay. Now, first, there is a random outcome between wins and losses. There is a random sequence between wins and losses. And the most important, I would like you guys to remember for the rest of your trading and investing career, is that there is a total random distribution between the trades that they're going to produce positive and the trades that they're going to produce negative result in our trading account on any sample trading size. Okay, let's review the previous example. We said that there is a random distribution between wins and losses on any sample size trade we're going to take. So what do we have to deal with? Let's say we have a trading system like we trade in the trend using the checklist I gave you so many times. If you need it, if you don't have it yet, let me know and I will share it again with you. In the checklist, it says that I recognize a market that is making higher highs and higher lows. Let's make it even simple. I don't care in which time frame, even in 1 minute time frame, okay? And if you want to try this on the 1 minute or 5 minute time frames on a demo account, just to make it faster, please, by all means, do it. You're going to get surprised when you will see that you're going to have trades they won and you thought they're going to be losers and the other way around. So the checklist says that when we see that there are higher highs and I recognize that the market is trending upwards, then I want to wait for some correction. And I can use my FIB tool and I can enter when the market it's going to come anywhere between the 50% correction of the FIB or the 61.8% retracement. But I also want to see a double confirmation by the last swing high to be tested. So if I have, let's say, forget the price action, engulfings and pin bars. If I have only this, now I'm giving you a very simple, effective, super powerful trading strategy. We have this. Yes, Jasper, I will definitely share the checklist. So I see market trending higher with higher highs and higher lows, spot on. I draw my FIB. I'm waiting patiently. I can even make it with a limit order, buy limit order. I put my buy limit. I put my stop loss where it has to go, and I measure this distance, and I double this distance here, and I say, okay, here it's my take profit. So if I win, I'm going to make this distance. If I lose, I lose this much. So if I risk here $50, here I win 100. If I lose only 50. All right, is it clear to everyone? I hope so. So if we replicate the same trading methodology, we're going to get surprised that some trades they win, some trades they lose. We don't know which one is going to be the winning and which one is going to be the losing trade. Guys, this is the key to unblock your mindset from anything has to do that you believe about trading. There is a total random distribution between the trades they're going to produce winning results, the trades they're going to produce losing results. Okay, that's as simple as effective as possible. So What if you believe that trade 8 will be the winner trade and it was a losing trade? And what if you believe that trade 14 will be a losing and it was a winner, and that trade 15 will be a losing and it was a winner? So what? What's the big deal? Any trading outcome does not determine who you are as a person. I'm going to say it many times until you're going to have this moment that you're going to come to the realization and you're going to see, oh my God, I used to judge myself, feel so much, and beat myself up because I was feeling betrayed and I was feeling all these sad emotions we described at the beginning with that example where you buy and when you sell. All right. What if you believe that trade 18 or trade 20, it's going to be the winning trade, but they were the losing trade? What matters is to know that your trade sample size, you took 20 trades, you had X amount of winners, X amount of losers, but your account is plus this amount. That's all what matters at the end. Okay? So, what to do to learn how to think as a professional trader and investor? First, you must understand that over a sample of trades, some will win and some will lose. Guys, everything starts from the acceptance of trading and investing nature. Unfortunately, I didn't have the privilege to have someone when I first started my trading to help me that much like I'm helping you now and just tell me, hey, Theo, everything comes here. Forget that everything is physics and maths and all this stuff. You need to accept this environment. It's a probability game. And that's the beauty of this, because you don't need to know what is going to happen next in order to make money, to experience the winning trade. You just need to apply simple trading and investing strategies and just let the trades play out. Now, what's the next one? Can anyone guess? You must aim for a higher reward to risk ratio on every single trade. Guys, there are trades that the risk to the reward to risk, it's 1-to-1, and I don't touch them because I won't allow the law of probabilities to play in my favor. What if that was a winning trade, Theo? You lost. No, that's the thing. That's the issue with traders. They don't accept what we just said. We think in probabilities and we have to use probabilities in our favor. And what is probability? It's the percentage of the amount of percentage that an event can happen over another event. So if I take the risk to participate in a trade with 80% probability because all the checklists apply to the letter, it doesn't mean I'm going to have a winning trade. But what does it mean? It means that it's a very high probability to give me a winning trade. All right. So every time, if you try this simple black and white execution, guys, with the checklist I will share with you, find on the 1 minute, 5 minute, trending markets, apply it, see the results. You're going to feel so good that you don't need to put yourself in a position of interacting with the market and every 1 hour, 5 minutes, just go and watch. You just put entry, stop loss, double the distance for reward to risk. And that's it. Even you do it randomly without any checklist, you will surprise that you're going to win a trade. And then you will see, how did I win? I didn't make an effort. That's another story. How traders, they think I didn't make too much effort. We have the tendency to believe that we have to work physically so hard in order to make some money that sometimes traded, we don't where to take the money from trading because we didn't put too much effort. That's another chapter. Okay. You must stop interacting You must stop interacting with your trades until they play out. You can't do that to yourself, guys. You have to accept that I'm going to stick to this exercise. I'm going to do it as Theo guides us to do it. I'm not going to interact with my trades. I want to push myself to accept this process, at least for this time, and just see the result. All right. And you must learn to stick to a fixed amount or percentage you risk on every trade, at least for some period. That's important. Traders, when they experience few 3 winning trades in a row, my goodness, euphoria, it's on the roof. The roof, maybe it's 10 meters high. Euphoria, it's 12 meters high. Why is that? Because we associate again our personality with the outcome. I'm a winner. I'm the trader. I'm the best. I found it. I make it happen. I took the trade. And the same applies when we experience losing trade. Oh my God, I'm a loser. I lost this trade. No. Guys, it's time to give ourselves the respect it needs when we are trading. We detach ourselves from any trading outcome. When we experience winning trades, we can just say, okay, that was a good trade. If you need to stay away from the computer for some time, not to get into the state of euphoria, just do it. Try to think and remind yourself that you don't need to put some labels that I am this and I am that when an outcome happens in a trading. Okay. So how to stop myself to open a contra trade? When I see the trade, I jump in. It's a losing one. Claudia, you have my total respect, like everyone else, and thank you so much for open up and sharing that with me. That's a very common, very common pattern we do as traders, and I will tell you why is this happening just in a sec, and we're going to close with that. Why, Claudia said, why I trade when I see this, I entered here, and then, or I enter there, and as soon as it takes over, I'm in a losing trade. Or I see this impulse move, I entered here, and then boom, I'm in a losing trade, and then the market just take over. It's a normal consequence because we react on the trading and we don't act. That's the problem. From now on, we will learn how to act on trades. We're going to be patient. We're going to apply a checklist, and trust me, when you're going to apply a checklist, you're going to just stick to one and only methodology. One and only. You master one trading methodology, regardless if you see these contra trends, counter trends, correction, retracement, however you name them. Regardless, guys, doesn't need to go that far and take all this trade. Okay. And that's purely the reason, because you start feeling fear that you missed out, Claudia. And again, it's normal. We feel the fear that we are missing out. We want to get on a trade, but as soon as we get on, it's too late because the trade is already done. It played. It was so funny at some stage when I was doing enormous amount of coaching to traders, and we were going through all the time that, guys, myself, I went through all this emotion at the beginning. It's absolutely fine. You just need some right guidance, and that's why I'm here. That's why we do this webinar, so I can help you as much as possible. Okay. I cannot stop myself to look at the computer all day long when I'm in a trade. It happens to every one of us. I used to trade, and at 3 a.m. I was going to bed at 12 a.m. and at 3 a.m. I was out of the bed. My eyes were like this. I couldn't even, I was just monitoring the trade. It's normal, but why? Because we do that because we don't have the belief that what we do is fine and it works. How can Claudia and everyone else get away with that and just stop it once and for all? Is, guys, to apply what we say today. Just open a demo account. Use the checklist. I will share with you the checklist right now. Just give me 1 minute to find it. You, oh my God, where it's now? Sorry, guys. Give me 1 minute. I think I stopped sharing. Yep. So we just need to apply this this process, and the only way to do it, it's practically. All right, really, it's practically. And 1 second. Okay, guys. All right, so guys, here is the checklist. Now, the only way to come to a point to stop behaving the way you behave right now so far is by doing this actual practical process that it's going to enable to yourself to come across with these emotions you are dealing right now. 20 trading samples are way more than enough. And on the first trade, maybe you're going to be calm, on the second, on the third, but trust me, there are too many trades until 20 trades. On the 5th, on the 10th, 12th trade, guys, you're going to start getting the same feeling that you were getting when you done your trading activity yourself. And this is going to come again when you're going to do this exercise. But I'm challenging you to stay disciplined. If you need to share anything, please feel free to send me a message on Instagram or wherever. I'm everywhere in social media. On YouTube channel, you can find I do the live trading, whatever. Send me a message. Don't worry. And just let me know, hey, I'm going through this stage of emotions right now. I'm in this trading sample, but I can help you stay accountable to yourself for the time you need. And I hope that at the end, when you're going to see the results and you're going to accept that, okay, I've done this as best as possible I could do. I didn't interact with my trades, and I feel good because I realized that I don't need to interact with the trades in order to experience the trading results I would want to experience. Guys, it's going to be a whole different mental world after you do this exercise, the way we describe it, without you interacting, not even for 1 second. You don't move stop loss to break even. You don't move stop loss away from their position. You put entry, stop loss, 2-to-1 reward to risk, and you do it 20 times. Use the checklist. The first on the checklist, it's for trading trends, either uptrends or downtrends. Stay with that. If you go to the 1 minute, 5 minute charts, you're going to see enormous amount of uptrend, downtrend. Stick either something else, please stick either to major indices or to major currencies: Euro, USD, Pound, USD, Aussie, CAD, and all this. Okay, don't go to New Zealand, Canadian dollar, or to euro against the Canadian dollar, euro, pound. Don't do that. Okay, just stick to the 4 or 5 majors. That's all. And you're going to be surprised. Okay. So, ladies and gentlemen, it was a privilege and honor to host this webinar with you. Thank you really so much for the time you devote to yourself to participate in this webinar. I really want to believe that you have you experience enormous amount of value, and you're going to apply. And I really can't wait to hear your stories when you do this exercise. Let me know how it went, how you feel. And I would like to really see you on the live trading webinars I do on Monday to Fridays. If you don't know how to register, let me just take you through in a sec. I totally sorry for that. I just totally forget it. So you go to our Admirals website, you go to education, Forex and CFD webinars, same way you register for this webinar. Start the trading day with Theo, a live trading webinar. You sign up and you're going to get the notifications every single day. All right. One more time, guys, it was a privilege and honor. Thank you so much. And I wish you good luck to everyone. I'm looking forward to see you tomorrow on the live trading webinar. Thank you so much. Bye-bye.